what is a freight broker surety bond? How does it work? And what happens if there is a claim that is filed against the surety bond from a carrier, for example? And what are some of the common trends as to why carriers may file surety bond claims against your surety bond? And likewise, what are some exceptions or exemptions that could apply to the surety bond, and some things that trucking companies and carriers, respectively, need to be aware of as well? So, first off, the surety bond is something that was mandated by the FMCSA, and it is mandated for a $75,000 minimum to qualify for, of course, property brokers and domestic freight forwarders as well. And in addition to this, there are some memberships out there that you can get where you can actually get even higher bond amounts of 100,000 or 250,000 as well. In addition to this, the bond is actually the point of the bond, the point of the surety bond is to have it in place to protect carriers against broker insolvency and a broker's failure to pay freight charges that are actually owed to the carrier for services that are rendered. The bond is in place only to cover unpaid freight charges and is not there or able to cover lost or damaged goods or damage to property, of course. And under the MAP regulations, the MAP 21 regulations, the surety bond must respond, or the surety must respond to the claim on or before the 30th day on which the notice is received, respectively. Now, in some cases, you may be wondering what happens if a claim is filed against your surety bond and you're the freight broker. Well, first, if a claim is filed, you will get that notice of an open claim. You are also given the opportunity to pay the claim or provide a written dispute. And if payment has been made or is pending, you will actually get a request or proof of payment, a request for a proof of payment. If there is a dispute over the invoice, the dispute should be supported with, of course, agreed upon terms of rate confirmation or broker carrier agreement, respectively. So on the broker insolvency part, if claims are unresolved after 30 days, the surety must investigate the broker for suspected insolvency. And the insolvent brokers are published for 60 days on that matter, and in accordance with, of course, the 49 USC 13906, as it has been amended by the MAP 21 regulations. Division C, Subtitle 1, Section 32918. If you didn't get that, just go back a little bit in this video and watch that number again, just to get that point from the regulations. Now, on the payment of claims, according to the regulations passed by MAP 21, the surety may only pay a claim if one of three conditions are actually met. So, one, subject to the review by the surety provider, the broker consents to the payment. Two, in any case in which the broker does not respond to adequate notice to address the validity of the claim, the surety provider determines that the claim is valid. Or three, the claim is not resolved within a reasonable period of time following a reasonable attempt by a claimant to resolve the claim under clauses 1 and 2, and the claim is reduced to a judgment against the broker. The surety must pay all valid claims received before or during the 60-day advertising period. After the advertising period has concluded, the surety will review valid claims received. Payment will be made in whole if total claims are under the bond amount. However, if total claims received are over the bond amount, so over $75,000, the surety will issue payment on a pro rata basis. In the event that the surety issues payment from the bond, the broker is responsible for reimbursement to the surety for any claim payments. Okay? There are some exclusions to consider as well. This is very important to understand as well. There are instances where a claim may not be considered actually valid. There are three exemptions found under the 49 USC 14705, okay? And so claims must be submitted to the surety within 18 months of the shipment pickup date. If a claim is submitted to the surety beyond the 18-month statute of limitations, then it is unable to accept the claim. Okay, the bond cannot cover claims containing exempt commodities. If a shipment contains exempt commodities, and it's mostly produce, agricultural commodities, dairy, and poultry, the claim is exempt from coverage. It's very important to understand that. If a shipment does not cross a state or federal line at any point during the shipment, it is also exempt from that coverage as well. Okay? So, what I mean by that is, so first off, the question that has been made quite recently to me is that it's a good time to remind everyone that the categories of these freight shipment exemptions actually do exist. Okay, so first of all, there are actually two of these basic exemptions that most carriers will deal with. So first of them is the intrastate clause that I just mentioned. So the intrastate shipments do not come under the authority of the DOT/FMCSA and are therefore not subject to the freight broker bond requirements. The intrastate shipments are those which are not defined as interstate, and interstate shipments are defined as between a place in a state and a place outside of such state, including a place outside of the United States, between two places in a state through another state, or in a place outside of the United States, or between two places in a state as part of a trade, traffic, or transportation originating or terminating outside the state or the United States. So this is that intrastate clause. So if there's intrastate things going on, so within the state or attempt to do within through another state, that's considered exemption. Okay. In addition to this, there are some actual exempt commodities or cargo. So there are generally two types of cargo that are that are exempt and non-exempt. Okay, so that's exempt and non-exempt. If you're hauling non-exempt cargo, then the DOT/FMCSA rules apply, and the cargo is subject to freight broker bonding rules. The rules for exempt and non-exempt cargo are generally covered by 49 USC 13506A6. Okay, so if you need that again, rewind in this video. The exempt cargo, or look at the description below, by the way. Exempt cargo is generally agricultural in nature, but include some odd items such as telephone poles or sawdust from lumber mills. Administrative Ruling 119 contains a partial list of exempt and non-exempt commodities. So take a look at the Administrative Ruling 119. Okay, and that'll give you some more information on that list. Okay, you can find that list on the FMCSA website in that as well. Please, guys, remember that if you are hauling a non-exempt cargo, your claim may not be paid in full. Okay, claims may be paid on a first-come basis until the bond is exhausted, or like most broker bond claims, on a pro rata percentage of all claims filed after the broker has potentially ceased operations in that respect. Okay. Some best practices to keep in mind. Okay, when you're going down this route, have clearly defined terms and conditions in any contract with carriers, and respectively, carriers, please read those contracts so you're aware of what's happening. Acknowledge receipt of a claim as soon as possible and forward to the appropriate party for a response. The surety only has 30 days to respond. If there is a dispute, you have to provide information on the dispute as soon as possible for the surety to make a decision and resolve the claim. To aid a disputed claim, provide the broker-carrier agreement to on file with the carrier and reference any terms of the agreement that support your dispute. Since the surety only has 30 days to respond, the sooner you can provide information on your dispute, the sooner that you can actually issue a decision and resolve the claim. Okay? Now, there has been some analysis of claims data that indicates an increasing number of claims that have been received for some of these potential reasons. So one of them is a deduction was made against the carrier for late delivery or missed appointments. Okay? Or the carrier billed unapproved accessorial charges, or a deduction was made against the carrier for non-compliance with tracking requirements, or there is an unresolved damage claim against the carrier and an offset has been placed against them. Okay? Now you need to have this bond, and now there's been additional new things that are being added that have come into law as of this year in January, but will not be actually enforced until January 14th or 16th. Don't hold me to that, of 2025. So of the middle of January of this upcoming year, 2025, is where these new rules will come into place. And the new rules essentially state that this is your bond, 75,000 for example. A carrier comes, they file a claim against that bond. You're going to have 7 days to reply to that bond or to that request, okay? And to get it resolved, okay? Now, if you don't reply in those 7 days, your license will actually be suspended, okay? Now, if you take this too far, potentially your license could be revoked. So it's additional things that the FMCSA is doing to hold brokers responsible for not providing proper bond requirements and the proper ways of handling it if a claim is filed against that bond. It's very important that you guys take this into consideration when you guys are going through this entire process of being a freight broker the right way, the ethical way. And yes, sometimes the claims that come against you as a broker are going to be a little bit suspicious, is not exactly correct and not exactly ethical from the carrier's perspective. But likewise, please, for the love of everything human being, everything that we know and love, if it's a true claim, the ethical thing to do, the moral thing to do is please pay it. Just pay your carriers. And to avoid all this nonsense, pay into your bond every year, whatever it is, between whatever 3,000 to some people pay up to over 10 grand, right? Depending on credit scores and how claim reports and all that kind of stuff. So whatever that percentage is, just pay into it. But before anything else happens, don't just pay into it and say, now I'm settled, I can take in as many claims, I don't really care about paying carriers on time. Don't go down that route. Please pay your carriers. If you have payment terms of 11 days, of course pay them in 11 days. If it's 30 days, just do 30. If it's 45, make sure it's 45. Okay, it's a very cash intensive to run a trucking company. And this is coming from a place of experience, a place of understanding of how much money it costs to run a big rig down the road. And I wish every broker could get a chance of running their own trucking company once in their life to see how much money it costs to run one truck, let alone a fleet of 15 trucks or 50 or 500 or more. So please guys, this is a very important video that you have to definitely watch when it comes to bond filings and bond claims. If you guys found this information helpful for you as a freight broker or as a trucking company, or if you have questions, comments, and concerns when it comes to surety bonds, or you need a surety bond, if you're someone that's trying to get into freight brokering and need a surety bond, let me know in the comments below. My contact information is also in the description below, and looking forward to some feedback from you as well. Like, share, comment, and get the word out there so people understand the procedures when it comes to the surety bond for freight brokers. All right, thank you very much, guys.